We've been in the rural space, and we think even in the current situation, rural is definitely outperforming urban in terms of the growth rate, while of course absolute volume in rural would always be a little less. The second is we are a multi-product company. We are not confining ourselves to just Mahindra vehicles or tractors. As you see from our balance sheet, we have 45% Mahindra, 55% non-Mahindra. Our belief is that we do take some of the OEMs into the rural market, and therefore that's a volume for us. The pre-owned vehicle market is a very exciting space, and we are in the pre-owned vehicle, whether it's auto, whether it's tractors, whether it's utility vehicle, and that gives us the further growth. We didn't have a very large base in as far as commercial vehicle is concerned, because we are one of the late entrants into heavy commercial vehicle business, but we do see 1 to 5 vehicle owners are adding volumes, and that's giving us a growth. I think the last bit of piece from where we get our confidence from is we have a very deeper penetration. On the liability side, I think we have an excellent ALM match, and we didn't have a problem in terms of ability to raise debt from the market. Right. Of course, the cost has gone up. Yeah. So we've kind of looked at both of this together, coupled with a large employee base that we have built and well-trained employee base we built. I think we are pretty confident to make a statement that maintaining that growth rate is not a very challenging thing.
I wish that you are able to grow the business far better than even 18 to 20%. But your business is also a lot impacted during the elections time, as well as the rural economy also does get impacted, the cash flows get impacted. So we are having 5 state elections now, as well as general elections in the first half of 2019. How are you seeing the overall rural economy cash flows? Are you seeing improvement? Because there are again certain states like Maharashtra which are facing drought-like situation.
So let's take the two. Let's take the election time. I mean, if you look at Bihar, UP, which went through state election, what we generally find is there is a lot of spend that happens at the state level, right? Whether it's on the infra front, and therefore the consumption story just open up, right. And we've seen we do well during that time. And we've seen people buy assets and they try and repay within 2 years' time, because that's a deployment that they do in the local infrastructure story, and their cash flows improve. In as far as Maharashtra particular is concerned, yes, it's believed to be an average kind of a monsoon, but there are some good pockets, right? So we have seen that I think sugarcane has been a good crop, and if the support price announced is good, I think the overall cash flow should improve. Maharashtra will also go in for a state election around 2019 or so, and we would believe definitely that Maharashtra will also open up on the infra front, and therefore for rural it's extremely important to look at both the cash flows. Right. One is the farm cash flow, as well as one has to look at the infra cash flow. On a pan-India basis, at this stage we think average plus monsoon, a decent support price, and the opening up of infra story, I think for rural it's a great time.
I was again going through your 2014 con call transcript, and it did mention about the election period. Now, there were 2 important points that I did notice. One was that yes, during the elections time, the asset quality, especially in terms of cash collections as well as in terms of repossession of vehicles, that did get impacted, but by far we did not depending upon how the economy is also doing at that point in time, the cash flows are a byproduct of the overall economic growth as well. How are you seeing the elections impacting, especially now in terms of asset quality? Because if I'm otherwise looking at H2 is really better for you historically.
So you're right, H2 is always a great second half for us, and historically 25 years if you see it would be. And for the reasons our harvest is around that time, the wedding season, the tourism, right? Climatically it's the best time. So we don't see anything different to happen around this time too. I'm sure the second half would far be one of the best second half that we are forecasting to have. In as far as repossessions, etc. is concerned, even as a business model, I don't think we built a business model on the basis that repossession is an answer to non-payment. It's in an extreme situation that somebody is not earning enough, and would they want to kind of either surrender the asset or we need to repossess. Now repossession happens only when we see intention of the borrower is not too good. Right. If somebody's intention is good but unfortunate circumstances doesn't allow him to repay, then I think they on their own come and surrender the asset. We have to be very disciplined and we have to be well organized during that time.
How are you then seeing your NPAs? Because 9% is the gross stage 3 NPA with a decent provision cover, and given the elections as well as H2 being historically better, do you think that we probably can expect the NPAs to end somewhere around 7.5?
I think our entire efforts are towards that. I mean, if you look at from where has it come to 9%, just about maybe 6 quarters back, we were somewhere around 13% or so, right? And we always believed, and if you look at any of my communication, I've always said that in this business, NPA is not a direct representation of a credit loss. They are very situational. Monsoon has failed, somebody is not able to repay, the NPA does get built. Even if you look at on a 9% NPA, I think we have close to about 150,000 accounts in NPA out of the 2.5 million live accounts. But 55-60% of them even today repay installment, which means they have not been able to pay for what has been built in the past as an overdue. Now, in the second half, as the cash flow starts improving, I'm reasonably sure that even they would start repaying. Our belief and our efforts and the entire approach that we've created is to bring down NPA to around 7%. We believe that's doable given the kind of positivity that we see in the rural market.
Just put in one question, because we do have an RBI policy also next week. What's your expectation there? Do you think that probably we are done with the interest rate hikes given what the oil prices, where the oil prices are right now?
I would think so, because I think already because of the liquidity pressure, the rates had moved up. Right now, if the liquidity does ease a little and if the inflation is yet to be adjusted, I think the rate increase may not happen. I think the focus now is how to really make liquidity available, because I think NBFCs are extremely important to the overall retail cycle, right? And therefore, if the liquidity situation, which I personally think is getting addressed, there's not too much pressure already there, but yes, of course, there is a cost which has gone up, and the banks will take a little extra time than they took before. But that's fine. But I think the liquidity is one which is getting addressed. I think rate is not the one which needs to worry about, and I don't expect there will be further increase in the next round.
Speaking about the liquidity crisis, and I would say Mahindra Finance is one company which probably did tide over or remains largely unimpacted, and one of the reason also is the fact that you do have very less exposure to the CPs, and also that the fact that you are deposit taking. I have a two-part question here. What's your understanding of this entire liquidity crisis? Do you think that we should really be seeing more measures still coming in from RBI? Because if I'm listening to DEA Secretary commentary, he does mention that probably NBFCs do need more money or more provisions there in terms of liquidity for growth. Would you concur there?
I think it's important to look at NBFC's business model. Any one of us who've got a certain strategy in place, and you must stick to that strategy. You look at us for the last 25 years. We've been a very, very strong, focused ALM matched company, one. Two, I think we are also a very, very strong tractor, vehicle kind of finance company. You won't see in our balance sheet too many other assets. We are not into loan against property, or we are not into gold loans and things like that, right? So I think one very important thing is what's the strategy of the NBFC and how meticulously do they follow that, right? So that's one to look at. I think it's also equally important to understand that what's the board guidance on all of this. We've been very, very strong. Our board has been extremely strong in guiding us to say not to run an ALM mismatch. So if you look at our any period in the 3-year cycle, we have a positive match at every bucket, right? So I think we've done well on that front, and that's the reason we don't feel pressurized. Now, is there a need for more stringent norms, etc.? I think if that is discussed with NBFCs, I'm sure the NBFCs will accept it and be ready with it.
In terms of your overall growth here now, because I've seen that you have your AUM now has reached close to 160,000 odd crore, and we have seen certain blips in the recent few years in terms of the economic cycle. Would it be fair to say that you can easily grow at 18 to 20% AUM, not just for FY19 but maybe even FY2021?
So I think this is the way to look at, right? We talked about disbursement growth, which we said is doable at 18-20%. even today the vehicles are at high discounts. Right? I am expecting that over a period of time as the demand picks up, the discounts on vehicle will go off, which means for the same volume we could have better disbursement. Right? That could be maybe another 4-5% addition that could happen. Now we're also a multi-product company, and therefore other OEMs who are focusing in rural market will also expand their market, and we would get a benefit of it. I am assuming in the 3-year cycle, will we get back to a 20-25% kind of a growth story over a period of time? Possibly yes, if the market conditions so prevail, the discounts go off, and maybe finally the OEMs will also do a price increase of their vehicle. Put all of this together, even for the same volume, you will have a better disbursement.
Right.
Now the maturity of contracts are at certain rates which have been in the past, and that would continue. So I think if you put the two together, I don't see a reason why our AUM growth should not be maintained.
If I'm not mistaken, you recently raised capital sometime end of 2017 itself, and correct me if I'm wrong, I guess the capital should be lasting for another couple of years easily. And hence, what is the kind of ROA or return ratio improvement that you would see for yourself?
See, we've always believed as a company, for so much of efforts that we put in that market, I think a 3% ROA is what we work at. We do breach it sometime because of the market conditions, etc. But historically, if you look at our book, and these are books which have to be looked at not on an annual basis, these are portfolios. So if you look at our average book is about 3 years, and you look at any 3 years, you would see we have made the 3% ROA, and that's doable. Now, we did raise capital in November, and they're not fully leveraged yet, and we are, I think, leveraging around 4.5 times. But to maintain a 13 to 15% capital adequacy, we would maybe go up to 6. So if you were to go up to a 5.5, 6, and then we make a 3% ROA, right, then you know the return that we are talking
So are you
of.
confident of a 3% ROA despite
I think
the
we
fact
were
of
1%
NPAs?
just about 1.5, 2 years back. Right? Now we've already improved to, and we have kind of reached 2 plus. And I'm sure with the second 6 months being really good, and if the NPAs are maintained at this level and go down from here, and our disbursement pace is maintained without shrinking margin, I think that's doable, and we have done it in the past.
Speaking about subsidiaries, and housing finance is an important subsidiary and also an important growth area for you. What's your outlook there, and especially in the light that we are seeing some amount of hiccups there in the state of Maharashtra, and Maharashtra state itself is contributing nearly 30% exposure there. But what's your overall plan? How do you tide over this current?
So one is, it's a great business because the product that we do are house improvement kind of a product, and it's about 100,000 rupee or 150,000 rupee. Not many are doing this. And we are maintaining a 40% growth, and it's running a book size of about 7,000 crore plus. You're right, Maharashtra, we did go through a little pressure because of the monsoons in the past, then after the demonetization where the cooperative banks weren't participative during that time, all of that has added to a little pressure out there. But in this business, what we lent about 1 lakh plus, what the customer is willing to give us is the land as the collateral, and the LTVs are pretty low. And this is an asset owned by the customer, and they don't want to unnecessarily intentionally default. So we are confident that even though there may be an NPA which moves up in this business, you look at the tenure of the contract, the credit losses will be next to zero. And if you were to look at a 3-year horizon for this business, I think it has an ability to have a book size close to about 20,000 crore, right? But of which I guess about 15-20% will have to necessarily come from affordable and low cost housing, right? And therefore the current business model will help us go up to 10-12,000 or so, and then the low cost and affordable housing will do the balance piece.